Friday. Happy Friday, everybody. Good morning, all you magnificent melonheads of the world, and happy Friday, everybody. Today is August 23rd, 2024. Happy birthday, Mom. Going to get that one done early. Everybody, today is Mom's birthday, and I'm telling everybody, Mom, you're awesome. Thank you so much for everything you have done for me over the years. You are wonderful, and I love you. Now, what did we get Mom for her birthday today? Jerome Powell's speech at Jackson Hole. Just what you always wanted, right, Mom? You always wanted a big speech from JPow on your birthday. Well, that's what you're getting this year. JPow is at J-Hole at 10 a.m. Just 1 hour from now. He will be stepping up to the mic to deliver his speech, and the whole world is holding their breath, waiting for some direction about what's going to happen with rate cuts. Will he be a hawk? Will he be a dove? He's probably going to be a dove. Will he be very dovish or just a little dovish? I don't know. Honestly, I find this whole exercise just incredibly stupid and pointless and frustrating because, once again, it's not supposed to work this way. In a free and fair market, billions of people, millions of people, and trillions of dollars would not hang on the every word of one unelected bureaucrat who controls the value of money. Shouldn't work that way. All right. Now that that's out of the way, Powell's going to talk today. He's going to look, the question, what it comes down to is 25 or 50. That's the big question everybody's going to be asking. If Powell leans a little bit too dovish, everybody's going to start saying 50. The market will rally on that news. If he leans 25, the market maybe got a little ahead of itself in the last week or two, betting, right now most people think 25, but I think there's an outside chance of that 50. So the market may be a little disappointed if he comes out a little bit hawkish today. Also, look for clues about unemployment. What will Powell do? How will he react to that big downward revision to the non-farm payrolls that came out on Wednesday? The one that the BLS gave to the banks before they gave to the public. Yeah, that one. Just hold up your Mentos and smile. Yeah, they're frauds. We all know. So that's the big story today. That's going to happen in about an hour. So we'll see what they say about that. I'll probably have more to say about Jackson Hole on my afternoon live stream this afternoon at 3:15 p.m. Eastern time to wrap up the week. Now, the other thing going on today, two more big stories from across the pond that are not getting enough traction. We got three distinct different stories in Bloomberg today, all pertaining to China, all very bad news. And it shows that this maelstrom, whatever you want to call it, this general malaise that is washing over the Chinese economy is spreading from housing. First, we got a story about the Chinese bond market. Volume in the Chinese bond market took a dive about a week and a half ago. And it shouldn't be surprising because you may recall at some point last week, the Chinese regulators stepped in and said, nobody's allowed to buy bonds anymore. You guys are buying too many bonds. So you banks in farm country that we don't care about, you guys go cancel your trades. Don't settle your trades. Do over, take your ball and go home. And lo and behold, people saw that happen. And now they're saying, I'm not trading in this Chinese bond market where some regulator can just come in and undo my trade anytime they want, especially if the trade is going my way, which it was. So volume is crashing in China's bond market. So, hey, you got China, PBOC, you guys wanted to intervene in markets and get people to buy fewer bonds. Congratulations. You got what you wanted. Now live with it. That's what happens when you mess with markets. You live with the consequences. Also going on, they're messing with the steel mills now. China has suspended approvals for new steel mills. This is something my friend Melody Wright was talking about on our side project, DNN, our other channel that I do with Melody Wright and Travis from Real Estate Mindset. By the way, there's a link down in the description to that for those watching on YouTube. China is suspending the approval of new steel mills because China is producing just way too much steel. So much so that they're sitting on giant stockpiles of it. It's rusting outside in the yard, just exposed to the elements. They're dumping as much of it as they can on the open market. Globally, it's crashing steel prices. Why? Because China has this big, gigantic steel industry that spun up over the last, several decades. And, well, now their housing market has collapsed. They don't need to build entire cities that nobody lives in. And so what do you do with all that steel capacity? I don't know, but they didn't turn it off. They didn't stop making steel. They're still cranking the stuff out. Chinese regulators are cracking down on that, saying no new steel mills. And last but not least, again, that with the housing market, China has announced that they are going to speed up the purchasing of vacant apartments. Remember, we talked about this a few more weeks ago, too. China's just messing with the market everywhere they can. They're trying to avoid that giant trillion-dollar liquidity that we do here in the West. I don't know why we do it in the West, but we do. China's trying to avoid that. And so the Chinese government is buying apartments. And they're saying we're going to buy up all these empty buildings and we're going to convert them into affordable housing so that the poor can rent to them. Oh, government housing, great. I'm sure the Chinese people are really looking forward to that. Well, that plan has been kind of dragging its feet, and honestly, the task is daunting because they have tens of millions of empty apartments in that country, and they're still trying to build tens of millions more that have already been sold to people, but they haven't built yet. There's actually a pretty amazing statistic in Bloomberg about that. We'll talk about that one later. So they're trying to speed up this Chinese government home apartment purchasing program, trying to reassure the market that, hey, the government has this under control because housing prices keep falling. Volumes in housing keeps falling, and it is spreading to the Chinese consumers. So you got a real mess on your hands in China. And also, guys, we got a real mess on our hands in Japan. Chinese Bank of Japan Governor Kazuo Ueda, he was out in the press yesterday and basically came out and said, you know what, guys, we're going to continue hiking rates for the foreseeable future. We're going to keep hiking, and we've got a long way to go. And very predictably, the yen started to strengthen when that happened. Now, there's been some comments from some lower deputies at the Japanese Finance Ministry and the BOJ who have been kind of suggesting that the Bank of Japan was going to ease off on the rate hikes, especially after that just total bloodbath on August 5th, that Monday morning Godzilla when the market was just absolutely collapsing. And then strangely, none of the brokerages worked that morning. Amazing how that works, crooks. So the BOJ had been kind of walking that back. And since the BOJ started walking that back, Wall Street started piling right back into the yen carry trade. There was all these ridiculously stupid articles in Bloomberg about how JP Morgan saying the yen carry trade was 50% unwound, and now it's 3/4 unwound, when they can't even say how big it is, let alone how far along in the unwinding it is. Those articles were totally fake. Well, it turns out Wall Street started piling right back into the yen carry trade. They're even more offsides than they were before. And wait till you see this statistic about SVIX, the short volatility ETF. Oh my God, what are these people in this market doing? The short volatility trade that blew up on August 5th, causing this ETF to lose more than half of its value in a couple of minutes. It's even bigger than it was on August 4th. These guys have piled right back into that boat. Everybody was like, oh my God, the ship is sinking, abandon ship. And everybody jumps off ship. And then they're like, oh, just kidding, the ship isn't sinking. And everybody climbed back in. And then more people climb back in with them. It's even more offsides. What a mess is going on in volatility. We'll talk about that one today. We've got a trucking company spontaneously combusted this morning. Universal Capacity Solutions is going out of business. No warning, no nothing. They're just laying off about 130 employees. More trouble in the logistics space. We haven't heard about the truckers going under for a while. That was a very big deal last summer. I don't know if you guys remember Yellow Trucking. That was a big blow up. There was a lot of smaller firms that went under. There was even a small bank out west that failed because of loans to trucking companies. Well, none of that. We haven't heard much from the logistics industry for the last few months. And then all of a sudden, Universal Capacity Solutions is going under without warning. And shout out to my buddies over at Macro Edge. We've got Wells Fargo announcing several hundred layoffs at U.S. offices. Pay attention, guys. That labor data is very important. And in further proof that this stock market will buy anything, much like Ron Burgundy, if you put that question mark and on the teleprompter, he will read it. This market will buy freaking anything. Peloton shares surged over 30% yesterday. Freaking Peloton rallying like crazy. Why? Did they make money? Nope. This market will just buy anything. That's why. You got to love it. Freaking Peloton. Oh my God. Tell me, what stage, guys, when Peloton stock rallies 35%, what stage of the bubble are we in? We got a lot going on this morning. Let's shrink my big melon of a head. How about a couple of those thumbs up and likes while we're doing that, guys? It really helps for the YouTube algorithm. And welcome to any new folks. While you're here, why don't you hit that subscribe button? Because we do this every single morning. And let's see what's going on in markets. Right now, the S&P is up 39 points ahead of the opening bell, clawing back most of its losses from yesterday. The S&P was down over 50 points yesterday, so we are rallying to correct that right now. maybe a couple of people got some advance notice of Jerome Powell's speech. I mean, they would never release important information to certain select favored few financial institutions before everybody else got the information, right? That would never happen other than Wednesday. Yeah, I'm sure nobody got advance notice about what Powell's going to say today. S&P's looking pretty good, up 0.7%. The Dow is up 213 points, also erasing most of yesterday's losses, 0.52% higher. And the NASDAQ is blowing out this morning, up a full percent, 196 points higher, ahead of the opening bell for the NASDAQ. So stocks are up across the board once again this morning. The Dixie is a little bit lower, down about 5 basis points at 101.46. It was considerably lower earlier this morning on some of that yen strength. We'll talk about that in a minute. And then looking over at the bond market, we got the long end in the red, the short end in the green here, 30-year Treasury, 4.108. That's down almost 3 basis points. The 10-year is at 3.835. That's down also almost 3 points. The 2-year, meanwhile, 3.998, down a point and change. Hey, we're below 4% on the 2-year here. And the 1 month at 5.34. That's actually up 2 points from yesterday. The 2-10 inversion is now still 16 basis points, almost 17 points. So pretty much right back where we were yesterday as far as the yield curve inversion. And the gold, look at the gold market today. Looking pretty good here. Back above 2,500. I like to see that. Spot gold, $2,501. That's up $16 and about 40 cents, or 2/3 of 1% this morning. Spot silver, $29.32. That's up almost 34 cents. Or 1.17% higher. So the shinies are both looking pretty good this morning. We've got copper's up by 1/3%. Platinum is down by 1/3%. Palladium is up by about 0.5%. And WTI crude oil's up 1.6% at 74.19 for October WTI futures. That's up $1.16 this morning. Let's check in with Bitcoin, still struggling with that 50-day moving average, but up once again this morning, $61,000 even on Coinbase. That's up about $600 from yesterday. Once again, though, if you zoom in, guys, that 50-day moving average, you can see here, Bitcoin is really struggling to recapture that. We got 1, 2, 3, 4, 5, 6, and 7 attempts. What a mess I just made on my chart. Look at all the squiggles Jack drew. Bitcoin cannot recapture that 50-day moving average just yet, still in that downtrend. All right, so let's talk about Jackson Hole, or let's see what the market is talking about Jackson Hole. Again, I hate that it works this way. One unelected bureaucrat shouldn't be able to move markets like this, but it is the market that we have, and so we're going to talk about it. Stock futures rise with all eyes on Powell's key Jackson Hole speech. Stock futures rose Friday as traders await an all-important policy speech from Fed Chair Jerome Powell for any guidance on future rate cuts. The Fed chairman is set to speak at 10 a.m. Eastern Time from the central bank's annual conclave in Jackson Hole, Wyoming. It's expected to signal it's appropriate for the central bank to begin lowering interest rates soon, with limited clues about the magnitude and frequency of the reductions. Powell is expected to lay the groundwork for the Fed's first rate cut in over 4 years, said Adam Turnkus, chief technical strategist at LPL Financial. Signs of reduced pricing pressures and cooling economic growth will likely be enough for policymakers to start reducing the target rate. Look, he's not saying anything we don't already know here, guys. He's just saying, yeah, they're going to cut in September. The question is just how much. So let's check in with the CME futures. This is Fed Watch tool. This is trying to guess what the Fed is going to do based on interest rate futures. And right now the market is pricing in a almost 72% likelihood of just a 25 basis point rate cut. You've still got about 28% likelihood of that 50 basis point cut. So the market is still leaning towards 25. We'll see if that changes after today. My guess is it won't change. For Powell to go 50 would be basically Powell admitting that he waited too long to start cutting. I don't think he's going to do that, because that would be more damaging to the Fed's credibility and thus more damaging to the bond market, in my opinion, than that extra 25 basis points would be helping things in the bond market. And I would just add, guys, with everything going on in Japan, I'm not sure rate cuts are going to help anyone. They might actually blow up in the Fed's face as that arbitrage between Japanese and U.S. rates gets smaller. Well, we're going to go out of order a little bit here. Let's talk about Japan before we get into these China stories, since we just brought up the yen carry trade. Yen climbs as Ueda indicates that rates can go higher in Japan. Stocks in Tokyo erase a positive start and fluctuate. Government bond futures also slide as the governor speaks. The yen led gains among group of 10 currencies. Japanese bond futures fell and stocks fluctuated as the central bank indicated that it is likely to continue to raise interest rates. The Japanese currency rose 0.6% to 145.46 per dollar in Tokyo. That's as of about 3:54 p.m. Tokyo time yesterday. Benchmark stock indexes swung from an early advance to a decline and then edged back up again after the lunchtime breaks. Bank of Japan Governor Kazuo Ueda said that policymakers can add to hikes made in March and July if the economy and prices are in line with their expectations. Speaking in Parliament on Friday, Ueda cited concerns about the U.S. economy when asked about recent market turmoil, while noting that he remains cautious about instability in financial markets. While BOJ Governor Ueda is trying not to rock the boat too much, the yen is getting a lift from his comments, said Alvin Tan, head of Asia FX strategy at RBC Capital Markets. Tan said that Ueda is effectively confirming that policy normalization will not only proceed, but still has a way to go. So if you guys were sitting here thinking, hey, Japan's going to back off of their rate tightening, the yen carry trade's not going to unwind anymore, Ueda is sitting here as the top, this is their JPow. Kazuo Ueda is the head of the BOJ. He's saying, we're going to keep hiking here, guys. So the yen started to strengthen a little bit yesterday. Let's look at the USD JPY chart here. Remember, this chart heading lower, that is the yen strengthening. The chart heading higher is the yen weakening. If you zoom in on this candle, we did have a pretty substantial strengthening in the yen for a while there last night, and then it looks like it gave back most of that. So the yen is pretty much right back where it was yesterday at 146.15. The market seems to be shrugging off Ueda's comments about the further interest rate hikes. Now, not just the yen carry trade is something you got to worry about, guys, here. Look at this chart that's been going around on X for the last couple of days. Michael Gayed posted this. This is looking at SVIX, which is the short volatility ETF or short volatility futures ETF. If you want to bet on low volatility, this is a way to pick up pennies in front of that steamroller. And right now, guys, this trade, look at this chart. Now, this is showing total assets under management, not price. This is the value of the total assets under management at this. It has more than doubled since August 5th. That is unbelievable. People have piled into the short volatility trade like I have never seen before. As Michael Gayed put it in his tweet, everybody is standing on the same side of the boat holding an anvil. What do you think is going to happen if everybody drops the anvil or if they start moving up to the other side of the boat? Look at how offsides short volatility this market is. Guys, if you think that whole thing that happened on August 5th was just a one-off and that it's done and the market got it out of its system, you're crazy, because the market went through all that turmoil. And then whatever happened, whoever stole from their clients to bail out their own fund or to bail out their margin calls, whatever the heck happened on that morning of August 5th, and I'm sure we're going to read plenty about this in the months ahead when we find out just how corrupt the financial system and everybody in it was on that Monday morning, August 5th. All the people who are offside short the VIX, they are going to get absolutely blown up. Whatever happened, guys, the problem is worse now. People have piled back into the yen carry trade, and they've piled even more into the short volatility trade, and they're essentially the same freaking thing. That's the problem. Oh, and the AI stocks have rallied like crazy too. Again, essentially the same thing. Short volatility, yen carry trade, long AI. They're all the same stupid, crowded trade. Everybody is in it all at the same time. And that Monday morning, August 5th, that was just a preview of what is to come when it unwinds. All right, now let's shift gears back over to China. We're going a little out of order this morning. China's bond trading collapses amid PBOC crackdown on the record rally. It's almost like when you mess with markets, the markets don't like that. Isn't it amazing how that works? Trading volumes over the last 2 weeks has slumped by 90%. Yikes. China's attempts to cool a record bond rally have stalled the drop in yields, but at the cost of a collapse in trading activity to an extent that may create more headaches for policymakers. Trading in the most active 10-year government bond has steadily decreased over the last 2 weeks, with the average daily volume on Wednesday and Thursday some 90% below the average of August 7th and 8th, according to data from the official trading system CFETS. The volume slump comes as Beijing ramps up measures to crack down on speculation in longer-dated bonds, including a warning this week against illegal trading. Jesus, illegal trading? What, buying bonds is illegal in China now? Well, in China, the law is whatever the communist government says it is. And, well, good luck with that. This chart right here is showing the volume, the yuan value volume of daily turnover in their most active 10-month government bond yield. And you can see ever since they just decided, hey, you rural banks, you need to cancel trades, don't settle them. Nobody wants to play in the bond market. Hey, does anybody want to play Monopoly with somebody who always gets to be the banker and cheats and can reach in and just grab a bunch of 500s every time they want? Oh, no, nobody wants to play? Well, then you end up with the Chinese bond market in its current state. If the turnover keeps plunging, the bond market may enter an unhealthy negative feedback loop that risks further deteriorating its price discovering functions, said Huaxi securities analysts, including Li Yu, who wrote in a note this week. Guys, when you rig the bond market, you end up with a rigged bond market, and nobody wants to play in a rigged bond market. China is learning that lesson here. Be careful. A collapse in volume could lead to some very volatile trading in those Chinese bonds. Now we got more Chinese interference in the free market. China puts the brakes on new steel mills with an industry in crisis. Beijing suspends capacity swap system for new furnaces, and city says it's likely not enough to address the problem. China has abruptly suspended its system for approving new steel plants as the government responds to a deep demand slump that has crushed industry profits and fueled a surge of exports. Beijing has for years required the elimination of existing capacity as a condition of building new plants. Those rules will no longer apply from Friday, and the government will develop an alternative program, the Ministry of Industry and Information Technology said in a statement. There have been growing calls for action from the Chinese authorities in recent months as steel prices plunged amid a worsening glut. Demand has fallen more than 10% since 2020, and many analysts say the industry will need to shrink to fit an economy that's becoming less reliant on steel-intensive construction. Chinese steel exports have ballooned this year to their highest since 2016, a sign that mills are struggling to find domestic markets for about 1 billion tons a year of steel. This chart is showing how China's steel production hasn't fallen much, even though the market for it has collapsed. They're still cranking the stuff out. And, well, there's nowhere to sell it to in the domestic industry, so you might as well sell it on the global market, and all that supply hitting the global market is collapsing the price. So now China is saying no new steel mills. They're suspending the mechanism for approval. And I just want to add, this note was kind of interesting here. Again, you always get a good little tidbit in the last paragraph of a Bloomberg article. There's always a good nugget hiding in there. The ministry said it would accelerate research into a new capacity swap policy, but local authorities that announce any new replacement plans would be deemed to have added capacity illegally, it added. So that last sentence there, local authorities that try to add a new plan, a new method for approving steel mills will do so illegally. That is the federal government, the CCP, threatening local government officials. Will throw your ass in jail if you try to go around us and create your own local mechanism for approving steel mills. That will be an illegal act. So there is a tendency for these local government officials to try to artificially inflate their regional GDPs in order to advance themselves within the party. And sometimes they act against the party's interests by, approving a steel mill that otherwise wouldn't have been approved in order to say, oh, look, our economy is booming in our local prefecture. Well, China's central government is saying that will be illegal if you do that. In other words, they're threatening local governments with that comment there. Some pretty strong wording hiding in that last sentence of that Bloomberg article. And we're not done with China yet. China vows to quicken buying unsold homes for public housing. China's not just messing with their bond market. They're not just messing with their steel market. They're also trying to artificially inflate home prices by buying up all of these vacant apartments and turning them into cheap public housing. Part of the latest effort to end the nation's property slump, they'll also step up renting and selling of public housing units. Oh, good. The central government is a landlord. I'm sure that's just going to work out great for all parties involved. China's housing regulator pledged to swiftly implement a program to purchase unsold apartments and turn them into affordable housing, its latest effort to cushion a record property slump. The government will also push forward renting and selling public housing units as soon as possible when conditions are right, Vice Minister of Housing and Urban Rural Development Dong Jinghua said in a briefing in Beijing on Friday. The ministry didn't unveil a volume target. Chinese authorities are trying to introduce a new housing model and put a floor under the prolonged property crisis. The real estate slowdown, now in its fourth year, has dragged down everything from the job market to consumption and household wealth. And you can also add the steel industry and the Chinese bond market, which is also a mess thanks to this crisis. And once again, as usual, there's always a good nugget hiding in the last paragraph of a Bloomberg article. Bloomberg Intelligence estimates that at least 48 million homes in China have been sold before construction is completed, bigger than Germany's total housing stock in 2021. And this is just amazing to me, guys. 48 million homes. Now, that's not 48 million vacant homes. Keep in mind, there's already 65 million vacant homes in this country. There's another 48 million homes that have been sold and have not yet been built. In other words, they've sold things they haven't delivered. So these Chinese developers are short housing when you sell something before it exists or before you deliver on it. You're basically short. How short are they? They owe a Germany. That's how many apartments have already been sold but haven't been built. They owe an entire Germany. They're saying this is bigger than Germany's entire housing stock in 2021. How can you possibly put a floor under home prices? I don't care if the government is going to step in and buy these apartments. How can you possibly put a floor under home prices if you have to build an entire Germany worth of housing just to meet the homes you've already sold? And you've already got 65 million vacant apartments. That's basically a France worth of empty apartments. So yeah, China is just going to have like this one big like empty half of Europe. But don't worry, the PBOC is going to try to put a floor under housing prices. Again, people have no idea the scope, the scale of this housing bubble in China. This is going to take decades to unwind. This is not going to be something that just goes away because of a new policy. And let's talk about this one too. Nashville Brokerage abruptly ceases operations and cuts 130 jobs. This is in Freight Waves this morning. Universal Capacity Solutions, a Nashville, Tennessee-based freight brokerage, ceased operations on Tuesday, laying off around 130 employees after its parent company pulled the plug on operations without warning, according to people familiar with the layoffs. A manager for Universal Capacity Solutions told FreightWaves on Thursday that a skeleton crew is staying on to help with the wind down and ensure that trucking companies hauling loads for the now defunct third-party logistics company are paid. There's some pretty interesting thing here. Sources familiar with the situation said they knew the brokerage was financially struggling amid the ongoing freight recession, which has forced hundreds of trucking and logistics companies to shut down or scale back operations over the past few years. We were under a lot of pressure to make money, but we were all in utter shock when the announcement was made that we were closing, the manager said. Everyone in the office that was tenured more than 6 months was given severance, which helps. Freight fraud, stolen loads, and double brokered loads have become a real problem in this recessionary market. If you're running right at 10 or 8%, where most of us are, and you have one load stolen, that just blew the profit for that account for a month. So no warning, this brokerage company, guys, look, freight is not doing so well in the U.S. right now. Trade is slowing. We've seen all these manufacturing PMIs are slowing. New orders are slowing. Deliveries are slowing. Lead times are coming down. Inventories are shrinking. And so, yeah, you don't have as much freight moving around. That's driving brokers out of business. Now, we haven't heard one of these in a couple of months. A lot of people were calling a bottom in this freight recession, but it looks like it may not necessarily be the end of that one. Also, one last one, guys. Wells Fargo to eliminate hundreds of positions at offices nationwide. This one is from MacroEdge. MacroEdge is fantastic, by the way, at tracking layoffs in real time. One of the best ones out there. Highly recommend you follow at MacroEdge RES on X or Twitter, whatever you want to call it. There's some articles out there about several local stories. There was an article about a few dozen laid off in Denver, a few dozen in Idaho, a few dozen at this office. So if you add up all of these local layoffs happening at Wells Fargo offices across the country, it adds up to a few hundred positions. More anecdata about weakening conditions in the labor market. And I just want to say, I think we're going to have to do Peloton this afternoon, guys. We're running out of time. But I want to say thank you so much to the dude. The dude abides. Thank you so much, dude, or El Duderino, if you're not into the whole brevity thing. He gifted 10 Nobody Special Finance memberships. Thank you so much, the dude. I appreciate that very much. Guys, if you received one of those memberships, please send your gratitude to the dude. Let him know that you are grateful. And hey, while you're at it, let M&J know you're grateful as well. Thank you so much, M&J, for everything you do for the channel, both for gifting those memberships and for your services as a blue wrench for keeping things neat and tidy in the chat. I appreciate that very much, M&J. Thank you so much for everything. Uncle Fedster says, happy Friday, Jack. Right back at you, Unc. Appreciate the good vibes on Friday morning, and thank you, sir, for supporting the channel. Larry Sullivan says, can you explain trading on paper for us noobs? I do require something of context for that, Larry Sullivan. Trading on paper, I think what you're referring to for a new trader, if you will. Usually when I hear trading on paper, I tell people, or before you just go out and buy stock, because most people get wiped out in their first few stock trades when they're new to trading. Of some common advice is to trade on paper. Oh, say you're thinking about buying Apple stock. Instead of actually buying Apple stock, just write down how many shares you're thinking about buying and what the price is. Add in what the commission would be if you're using a broker that charges a commission, and just basically pretend that you bought it and track it. You can create a fictional portfolio and just watch how it performs on paper. All right. And then make your trades based, then you can, whenever you're going to sell again, it's like trading, make believe trading. It's pretend trading. And the recommendation is usually for people to make these trades on paper before they actually get a brokerage and before they actually start moving money around, so you can learn your lessons beforehand. I believe that's what you're referring to when you're talking about trading on paper. Sometimes people talk about paper trading referring to the metals market and how gold and silver futures can move the underlying price of the physical metal. That's sometimes referred to as paper trading. So I'm not sure which version of paper trading we're referring to, but thank you, Mr. Sullivan, for the support of the channel. I hope I answered your question, sir. And Mr. Gomers44 says, thank you, Jack and mods. Yes, thank you again to the mods. Regarding the election, we are doomed financially either way. One side just gets us there quicker. I kind of agree with that. I really do. And I don't mean for this to turn into my guy's better because this or my girl's better because that. Look, Trump's going to cut taxes without cutting spending, which means he's going to borrow more. And Kamala's going to give everybody a pony, which means she's going to borrow more. So whoever gets in power is going to borrow more money. They're going to lean more heavily on the bond market. All right. And look, the bond market is not this infinite money supply that can be drawn upon at any time. That's the Federal Reserve, not the bond market. So if there is more demand for money, more government borrowing, and the supply of money stays fixed, well, then the price of money rises, and the price of money is interest rates. So whoever gets in the Oval Office next is going to borrow more money. They're not going to cut spending. That's not even being talked about, cutting spending. Nobody's talking about cutting spending. It's unbelievable. So you're probably going to have some kind of a bond market freak out, very similar to what we had in the UK at the end of September, beginning of October of 2022, when Liz Truss announced that she was going to do this big tax cut without any spending cuts to go along with it. When the UK bond market was already in big trouble, they had a liquidity crisis, and they almost blew up the country's freaking pension system. It was called the gilt market crisis of 2022. And so what happened? The Bank of England had to step in the middle of the day and just emergency start printing money and buying those bonds. In other words, the central bank monetized government debt. And that's what the Federal Reserve is going to have to do here eventually, because both of these horrible candidates running for office are going to lean more heavily on the bond market because they're going to increase the size of the government deficit. Both candidates will do it, which means the bond market is probably going to freak out, which means the Federal Reserve is probably going to have to step in and print money and buy those bonds that the government is issuing, which means you better be holding a little bit of shiny when that happens. Let's just put it that way, guys. I do think we are just absolutely walking blindfolded into a liquidity crisis in the bond market. That's why I think either way, whoever wins, the bond market is hosed sooner or later. I can't tell you when it will happen, but it's going to happen sooner or later. Thank you so much, Gomers44. Appreciate the super chat and the support of the channel. I share that sentiment, sir. And thank you, everybody, for having your coffee with the Melonheads this morning. Thanks, guys, for the super chats and supporting the channel. You guys are awesome. Also, thank you so much to my magnanimous Melonheads on Patreon and on YouTube. You guys rock. Thank you for everything you do for the channel. Hi, Mom. Hi, Dad. Love you guys. Happy birthday once again, Mom. Everybody, let Mom know happy birthday in the comments once more. I'll see you guys this afternoon at 3:15 p.m. Eastern Time for my weekly wrap-up live stream. And we got J-Hole in just about another 20 minutes. JPow at J-Hole. I wonder what he's going to say. Until next time, everybody, live small and dream big.